Hello, and welcome to this episode of Global Markets, where we talk about trading, investing, and economics each and every week. On today's episode, we'll be talking about how to choose winning stocks and how to curate them into a shortlist. This is the second episode in our series of How to Invest Like Warren Buffett, a value investing guide for 2021 and years to come. Hello, and welcome to Global Markets, where we're talking about trading, investing, and economics each and every week on Thursday and Sunday. We'll be giving you the latest news and updates on the markets, as well as educational tips and tricks on how to invest. We have weekly videos every Thursday and Sunday, so if you enjoy what you see here on our channel, please like and subscribe this video, as it will help us out as a growing channel. So, now on to how to choose the winning shares. So the first thing that we do is we create a shortlist. So you may be asking, what is the point of a shortlist? In this stage of the value investing process, stage 2, we create a list of sectors and businesses which we actively monitor. These help us learn and detect patterns that certain stocks follow. For example, we may see there's a major support level at one price point and a major resistance level at another, and we may use that information to help inform our trades and investments as we go forward. Secondly, we also know that we can use shortlists to monitor market announcements and news around a sector or a share. So it is crucial that we are keeping up to date if we are seeking to be a value investor in the shares that we are holding and the shares that we are seeking or looking at entering in some stage. And at the end of the day, it acts as a research list. Our main goal in shortlisting is to learn about specific shares and market sectors. So, in another way, building a watch list allows us to understand businesses. And it is crucial as value investors to understand businesses. As Warren Buffett says, never invest in a business you cannot understand. So through this whole process of learning about businesses and shortlisting them, we are seeking to understand these businesses. So how do we build the perfect shortlist or watch list? So firstly, we want to add businesses that we know. For example, if you're into tech, you'll know Apple, Amazon, and Google. So why do we add businesses that we know? So firstly, it's because we are more likely to know the information about them and how they operate. We're more likely to be keeping up to date with the news, and we're more likely going to be keen to research into that business. So that's why, as part of our watch list, we want to add these businesses that we know, because they are ones that we'll be more likely to follow, and they'll also be ones that may help us as good investments. As if we know about the business, we probably know what their purpose is, and that can help guide an investment process. Secondly, we want to add businesses that are in the news. So when I say this, I'm not saying that we want to be investing in these businesses. I'm saying that we want to keep track of them. We want to see what all the hype about them is. And we want to research them and find, do they really have something that is a market beater? And sometimes these businesses in the news can be huge. For example, many years ago, Tesla was in the news. Now it's a major share. And the third point is we want to add businesses in sectors that we have a passion in, or businesses that we have an industry knowledge in. These will help us in our process, as these will be things that we know about. If we know for example, if you know technology and you even work in the tech industry, investing in tech businesses can be useful because you can know what the technology they are using to beat the market and be so successful is all about. And that is why having industry knowledge and having a passion in that industry is an invaluable asset. Because if you have a passion in something, you're more likely to know, how is this piece of news going to affect the business? What's their long-term focus going to be? Are there any major risks coming to them? So one of the biggest things that you want to also do is you want to add businesses that you believe are emerging. So we'll be talking about a specific example later, and these are businesses that you may see a technology is on the rise or a market is on the rise, and you think that business is perfectly suited towards that market. And finally, even though it's a share watch list, you also want to keep a watch of assets that businesses are aligned on, such as iron ore, gold, Bitcoin, even with the more recent ones, and any other underlying thing that can determine the business's value. Because in value investing, we want to be looking at the intrinsic value of a company, and this often can be very dependent on what they're exporting or importing. So another tip is if this isn't necessarily for all types of investing, but if we are looking to be a value investor, we want to stay away from extremely volatile shares. So these are shares that are like GameStop and even Tesla at this stage, where it's very unclear what their value is due to lots of social hype and potential bubbles. So if we want to be a value investor and we want to take a safer road, it is best to take businesses that aren't as risky and that we know more about. So we're talking about businesses that are emerging. So what is an example? So one example may be, you see that Bitcoin is becoming a big thing. Many people are invested in Bitcoin. Many people are very interested about blockchain and crypto. So you may say, so then if we know this is a market and this is something that is on the up, you can often look to a share that uses that or utilizes the technology. For example, Marathon Digital Holdings, they actually mine Bitcoin and they make money off mining Bitcoin and through other blockchain related things. So this is an example of an emerging share that you may look at, because they're using something else that is emerging, and then that emerging factor generally means that the share has potential in the future and that you want to monitor it. So once we have built a watch list of shares that we are passionate about, shares that we think are emerging, and shares that we have knowledge in, what do we do? So firstly, our goal again is to understand businesses and to track them. So the things that we want to keep an eye out for is announcements such as change in management, results, earnings, and updates. We want to be looking at share movements, broker recommendations. So a quick thing about broker recommendations is generally you should never act on a broker recommendation solely. You should first see if this lines up with your thoughts, if it's something you're thinking about, if a lot of other factors lead you to come to that conclusion. However, you should never blindly follow broker recommendations. You also want to be tracking the supporting assets. For example, if you are in an iron ore exporter, you want to be keeping track of iron ore. And as we go through this course in the later videos, we'll be looking at how to value these shares. And what we're going to talk about today is how we're going to also do a stock survey of all these shares. So when we're trading, we want to be keeping a notebook or a page of notes, and this will have a survey and information about the shares that we think are important. So the factors to consider is, how do they make money? What exactly do they do as a business? Is it a growing or stable market? And are there any upcoming risks or events that could prove dangerous towards the business? So let's walk through an example of how we would complete the survey. So we're looking at this, we have a passion in the tech industry, we're on social media a lot, so as we're talking about a business that you know and a business that you have passion about, if you're a techie person, maybe Facebook. So simply we'll be saying the name is Facebook. You want to ask yourself, am I up to date with the latest news around Facebook? Do I know the business? Do I know what they're doing? Am I keeping a track of them in the news, in the courts, and anything else that may relate to the business? Because as we know, we can do as much valuing as we want, but at the end of the day, these events can definitely change the intrinsic values of shares, and as value investors, it is very important that we keep track of it. So then you'll ask, what does Facebook do? They are a social media company. And then you may go on to ask, how do they make their money? So we know that they do ads and data collection, something that is going to happen and something that is increasing. And then you'd ask, is this a growing market? And you may say, yes, the internet is a growing market because it's growing in countries such as Africa, India, countries in Africa and India, and many other Asian countries. So that's why you'd think it's a growing market. Is their revenue dependent on another asset? Not so much for Facebook. You could argue that there are some assets that have an impact on Facebook. However, it's not too big of a factor. And then finally, you'd ask, are there any major events? Now, this question here is a very important question. So if you think about it, you may go through this list. You may say Facebook's even trading at a discount to its market price. Obviously, Facebook must be a very good buy right now. However, if you forget about this factor, major events, and if you're not up to date with the latest news around Facebook, you may miss something huge. At the time that we're recording this video in early October, Facebook is currently being sued, and they're currently going before Congress after accusations of harming children and damaging democracy. So this may be a big turning point in the share's future, and it could be something that you want to consider before you decide whether to invest. That's why it is crucial as value investors that we do not isolate ourselves in earnings reports and the fundamental analysis such as PE, but we also look at the news around the company. So now for one more example. We may be looking at Fortescue Metals. It's an Australian company. So let's say you have a mining background, you know the industry, it's an industry that you like, and you know a lot about the company, so you're pretty passionate about the company. So you may say you're up to date with the latest news around Facebook, you're Fortescue, you're tracking who they're hiring, how they're being managed, and stuff like that. You'll then go on to look at what do they do. So they do iron ore production, they're an iron ore producer. And you'll then look at how they make money, and you'll be exporting iron ore. They export iron ore. So just to note, when you're looking for all this information, it's generally easily accessible just by Googling the company, scrolling through some news articles, going to your broker and looking at their news tab and bio about the company. And you want to make sure that the shares on your watch list you know about. So if you're being up to date with the latest news around Fortescue, that means that every couple of days you're looking at Fortescue, you're saying, this is what's happening, their management may be changing, they may be getting sued, and you just need to keep track of all of that. So the next thing is it a growing market? Well, yes, it is growing. Iron ore has had a growing demand across the world, and in the long term, the next 10 years, we'll always be needing iron ore to develop infrastructure, so that may tick your box. And the other thing is, if you look at this company, you'll notice that iron ore is being repeated a lot. So our final thing in our stock survey is it dependent on another asset? And for Fortescue, the case is it definitely is dependent on iron ore, as we'll discuss in the next few slides. So you may be looking at Fortescue and be saying, it's trading at $14.18. And you may go on to do your analysis, look at this budget sheets, be looking at the stockbroker analysis, and you may be saying a fair value is at $18 using historic data. So then you may be saying, we're trading at a huge margin to that fair value. We're trading way below that. It's obviously time to start buying into this company. However, if we ignore the fact that it is heavily dependent on iron ore, we may say, let's go in. However, it's so important that we look at depending assets and things that concern the company. Because if we look at iron ore, look at where it is now. Iron ore has dropped almost half its value since earlier this year, which is huge for Fortescue. So whilst it may be trading below what we think is a fair value on historic data, if we aren't keeping up to date with the latest asset changes and the latest news around it, we may be making a decision that isn't in our best interest. So the key takeaways from this section is that earnings reports won't tell you everything. It is crucial that we monitor the market if we wish to be an active value investor. And we must always remember, if a share or asset is trading at a significant discount to what we believe is a fair value, there is a reason behind it, and we should find out what that reason is before we act on any of our analysis. So that is all for today's video. Please join us each week on Thursday and Sunday for our videos and our continuation of this series on how to invest like Warren Buffett. Please like and subscribe to this video if you want to hear the latest updates about trading, investing, and economics.